They're watching every tick, every candle, every movement. You tell yourself, this is where the money is. But let me tell you something most men learn too late. The market does not pay you for the hours you watch it. It pays you for the moments you understand it. There was a time when I believed what you believe now, that the more I stayed in front of the tape, the more I could take from it. I thought opportunity lived in constant motion. I was wrong. And that mistake cost me more than money. It cost me clarity. So listen carefully, because the difference between a losing trader and a wealthy one is not how often he trades. It is how long he is willing to wait. The average trader wakes up with urgency. He opens his charts, scans every market, flips through time frames, searching, always searching. He believes somewhere, at any given moment, there must be a trade worth taking. And when he finds something that almost looks right, he takes it, not because it is clear, but because it is there. That is the first mistake. You see, the market moves all day. Yes, prices rise and fall endlessly, but movement is not opportunity. It is noise, and the man who cannot distinguish between the two will spend his life reacting, instead of profiting. I have seen traders sit for 10 hours taking trade after trade, convinced they are working hard. They are not working. They are bleeding slowly. Another man, far less active, far less emotional, may act only once or twice in a day and walk away with more than the first man makes in a week. Why? Because he understands something you do not yet accept. The market rewards precision, not participation. The truth is, there is no single best hour that guarantees profit. But there are windows, moments, when the market becomes clear, when it stops whispering confusion and begins to speak with intent. These windows are brief, and if you are busy trading everything before them, you will miss them entirely. At the open, for example, you will see chaos. Prices jump, spreads widen, emotions run high. Everyone reacts. News, overnight positions, fear, excitement. To the inexperienced trader, this looks like opportunity. But it is a storm, and only a fool trades in a storm without a map. The disciplined trader does not rush into this noise. He watches. He observes. He lets the market reveal where it is weak, where it is strong, where it is lying, because in that first hour, the market is not showing direction. It is testing you. Then comes the quiet. Midday, the market slows. Volume drops, movement becomes dull. This is where most traders lose their discipline completely. They have been watching all morning. They feel they deserve a trade. So they begin to imagine setups. They force entries. They convince themselves that small moves are enough. This is not trading. This is impatience disguised as strategy. And impatience is one of the most expensive habits you will ever develop. You must understand this clearly. There is no obligation to trade. The market owes you nothing. And just because it is moving does not mean it is moving. For you, the wise trader steps away during these hours. He protects his capital. He protects his mind because he knows something the average man refuses to accept. Not trading is often the most profitable decision you can make. Now listen closely, because this is where the shift happens. After the chaos of the open, after the deception of midday, the market begins to settle. It shows its structure. Levels become clearer. Liquidity reveals itself. What was hidden becomes visible. This is where the patient trader begins his work, not because the market is moving faster, but because it is moving with purpose. The best trades are not dramatic. They are clean. They make sense. You do not have to force them. You do not have to convince yourself. You simply recognize them and act. That is what you were paid for, not for reacting to every flicker. Most of the trading day is useless to you. Yes, useless. It exists, but it does not serve your edge. And the sooner you accept this, the sooner you will stop chasing shadows. There were days in my own career where I made my largest profits from a single position taken after hours of doing nothing. You understand what that means? Doing nothing was part of the strategy. Because waiting is not inactivity. It is preparation. The average trader cannot do this. He needs action. He needs to feel involved. But involvement is not rewarded. Correct action is. One good trade is enough. Two, at most. Anything beyond that, and you are no longer trading with precision. You are trading with emotion. The man who seeks 10 trades a day is not searching for opportunity. He is feeding a habit, and habits, if left unchecked, will destroy you slowly. Before the day even begins, you must know what you are looking for. Not vaguely, not something that looks good. A specific condition, a specific behavior, a specific setup, and when it appears, you act without hesitation. If it does not, you do nothing, without regret. That is discipline, and without it, timing means nothing. As the market approaches the close, something changes again. Volume returns, urgency returns, but it is not the chaos of the open. It is calculated. Positions are being closed. Institutions are adjusting. The market is finishing its story for the day. This is where experienced traders often do their best work, because now they have context. They have seen the entire day unfold. They understand where the market has been and where it is likely to go. To the untrained eye, this looks like another burst of noise. To the trained, nay, it is clarity. But only if you have the patience to wait for it. So what is the best time of day to trade? It is not the open. It is not midday. It is not even the close. It is the moment when the market is clear and you are prepared. That is all. You must understand yourself as well as you understand the market. Are you sharp in the morning, or do you think more clearly later? Do you handle volatility well, or do you perform better when things are steady? These questions matter, because trading is not about copying others. It is about aligning your strengths with the market's behavior. There will always be another opportunity. Always. But there will not always be another chance to preserve your capital, your discipline, your clarity. The great traders were not the busiest. They were the most selective. They waited, and when the moment came, they acted with conviction. Be like them. Stop trading all day. Start trading all day. Start trading at the right time, because in the end, the market does not reward the man who is always present. It rewards the man who knows when to be. There is something else you must understand. Something most traders never calculate. The cost of overtrading is not only financial, it is psychological. Every unnecessary trade you take leaves a mark, not always visible at first, but it accumulates. A small loss here, a break-even there, a missed opportunity somewhere else. It begins to weigh on your judgment. And slowly, without realizing it, you stop seeing the market clearly. You begin to anticipate instead of observe. You begin to hope instead of analyze. And hope is a dangerous companion in speculation. I have known men who were not lacking in intelligence, not lacking in knowledge, not even lacking in capital, yet they lost everything. Not because they did not understand the market, but because they could not control themselves. They traded too often. They react too quickly. They believed every move required a response. And in doing so, they exhausted not only their accounts, but their ability to think. You must guard your mental capital as carefully as your financial capital. Because once your mind becomes clouded, even the clearest opportunity will appear uncertain. Now let us speak about something that quietly controls most traders. The fear of missing out. You will see a move you did not catch. A clean breakout, a strong trend. A trade that would have been obvious after it has already happened. And immediately your mind begins to whisper, you should have taken that. You missed it. Don't miss the next one. This is where most men lose their discipline. They begin chasing. They enter late. They force trades that do not meet their standards, all because they cannot accept a simple truth. You are not meant to catch every move. No one is. The market is not a single opportunity. It is a continuous stream. Missing one means nothing, but chasing one can cost you everything. You must learn to let trades go without emotion, to watch a perfect setup unfold without you, and remain unaffected. Because the moment you feel the need to make up for a missed opportunity, you are no longer trading. You are compensating. And compensation leads to mistakes. There is a discipline in doing nothing that most people will never understand. They see inactivity as weakness, as hesitation, as lack of confidence. But in trading, it is often the highest form of control. To sit before the market, to see movement, to recognize that it does not meet your criteria, and to do nothing that requires strength. Because you are not only resisting the market, you are resisting yourself. Your instincts will tell you to act, to participate, to be involved, but discipline demands that you wait, and waiting is uncomfortable. It creates tension. It makes you question yourself. But over time, you begin to see its value. Because when you finally do act, you act with clarity, without hesitation, without doubt. And those trades, the ones taken with full alignment, are the ones that matter. You often hear traders ask, what is the best time of day to trade? But they ask the wrong question. They are searching for a universal answer, a fixed hour, a guaranteed window, something they can follow without thinking. But trading does not work that way, because the best time to trade is not only about the market. It is about you, your mindset, your energy, your ability to focus. Some traders perform best in the early hours when the market is fresh and movement is sharp. Others perform better later when the noise has settled and structure is clearer. But most never discover their time because they never stop long enough to observe themselves. They trade all day, they exhaust their focus, they blur their judgment, and then they wonder why nothing works consistently. If you want to improve, you must begin to study not just the market, but your behavior within it. Notice when you make your best decisions. Notice when you make your worst. Notice the time. Notice your state of mind. Because patterns exist, not only in price, but in you. Modern trading has created a dangerous illusion. With so many markets, so many instruments, so many time frames, you are led to believe that opportunity is everywhere, at all times. And because of that, you feel justified in always searching, always scanning, always trading. But this abundance is deceptive, because while opportunities may be frequent, advantage is not. There is a difference. An opportunity is simply movement. Advantage is when that movement aligns with your edge. And that alignment is rare. If you treat every opportunity as if it were equal, you will dilute your focus. You will lower your standards. And over time, you will lose the ability to recognize what truly matters. The disciplined trader does the opposite. He ignores most of what he sees. He filters aggressively. He waits for alignment. And because of that, when he acts with conviction. You cannot develop conviction in the moment. It does not appear suddenly. It is built before the trade ever exists, before the market opens. You must already know what you are looking for. You must define your conditions, your structure, your confirmations, not vaguely, not emotionally, but precisely. Because when the moment comes, there is no time to think, there is only time to execute. And if you have not prepared, you will fail, hesitate, or worse, you will improvise. And improvisation in trading is often just emotion in disguise. But when you are prepared, something different happens. The trade appears and you recognize it instantly. There is no confusion, no internal debate, only action. That is conviction, and conviction is what separates consistent traders from inconsistent ones. There is a certain calmness that develops when you begin to understand all of this. You are no longer chasing, no longer reacting, no longer trying to be everywhere at once. You become selective, measured, deliberate. You do not feel pressure to trade. You do not feel anxiety when the market moves without you, because you know your time will come, and when it does, you will be ready. This confidence is not loud. It is not visible. It does not seek validation. It is quiet, and it is built on discipline. The best time of day to trade is not something you find on a clock. It is something you develop within yourself. It is the intersection between market clarity and personal discipline. It is when your plan is clear, your mind is calm, and your criteria are met. Nothing more, nothing less. If you can learn to wait for that moment, if you can resist everything that is not aligned with it, then you will have something most traders never achieve. An edge. Not in indicators, not in strategies, but in behavior. And behavior is what determines everything in this game. So remember this. You do not need more trades. You do not need more hours. You do not need more information. You need less noise, less action, less interference, and more clarity. Because the market has always rewarded the same kind of man, not the fastest, not the smartest, but the most disciplined. Become that man, and time itself will begin to work in your favor. There is another subtle danger that comes with watching the market all. Day one that few recognize until it is too late. The more you watch, the more you believe you understand. And the more you believe you understand, the more confident you become in taking trades that were never part of your plan. It is a quiet illusion. You begin to feel familiar with the movement. You think you can anticipate the next turn, the next breakout, the next reversal. After all, you have been watching for hours. But familiarity is not understanding, and time spent observing noise does not transform it into clarity. In fact, it does the opposite. It dulls your perception. It makes weak setups appear strong. It makes randomness feel intentional. And before long, you are no longer waiting for clear conditions. You are interpreting everything as if it were meaningful. This is how overconfidence begins. Not from success, but from overexposure. The disciplined trader protects himself from this. He does not stare endlessly at the screen. He steps away, he resets his perspective. Because he understands that clarity is not found in constant observation. It is found in selective attention. The market teaches you patience. It has a way of teaching lessons that no book can provide. And one of its most important lessons is patience, but it does not teach it gently. It teaches it through loss, through missed opportunities, through long periods where nothing seems to work. I remember days when I took trade after trade, convinced that the next one would be the right one. Each loss felt small, manageable, but they accumulated. Not just in my account, but in my confidence. And eventually, I realized something I should have understood much earlier. It was not the market that was wrong, it was my timing. I was trading when there was no advantage, acting when there was no clarity, expecting results from conditions that did not deserve my capital. That realization changed everything. Because once you understand that patience is not optional, it becomes a requirement. And once it becomes a requirement, your entire approach begins to shift. The emotional cycle of the undisciplined trader is something you must recognize. You begin the day with focus. You tell yourself you will be disciplined, you will wait. You will only take the best setups, but then the market begins to move. You see a small opportunity. It is not perfect, but it is close enough. You take it, perhaps it works, perhaps it does not. Either way, something changes. Your discipline weakens. You take another trade, then another, and before you realize it, you are no longer following your plan. You are reacting. Emotion begins to take control. A loss creates frustration. A win creates overconfidence. Both lead to the same outcome. More trades. And more trades lead to more mistakes. This cycle repeats itself day after day for most traders, not because they lack knowledge, but because they lack control. Breaking this cycle requires something most people are unwilling to develop. Self-awareness. You must be able to recognize when you are no longer trading your plan. And you must have the discipline to stop, not later, not after one more trade, immediately. This seems illogical at first. After all, more trades should mean more opportunities, more chances to profit. But in reality, more trades often mean lower quality decisions, because the more frequently you act, the more likely you are to compromise your standards. You begin to accept setups that are not ideal. You begin to justify trades that do not meet your criteria. And over time, your edge disappears. The disciplined trader does the opposite. He reduces his activity, he raises his standards, he becomes selective. And because of that, each trade he takes carries more weight, more clarity, more purpose. He is not trying to win often. He is trying to win correctly. And there is a difference. At some point in your journey, you must define your window, a specific period of the day where you will focus your attention, where you will look for your setups. And outside of that window, you do nothing. This is not a limitation. It is a filter. It protects you from unnecessary exposure, from emotional decisions, from the temptation to trade. When conditions are not aligned, your window may be 1 hour. It may be 2. It may vary depending on the market. But once you define it, you must respect it, because discipline is not tested when things are easy. It is tested when you feel the urge to break your own rules. And the moment you begin to trade outside your defined window, you begin to erode the very structure that protects you. There is something few traders speak about, but it plays a significant role in failure: boredom. When you sit for hours without taking a trade, your mind begins to wander. You feel unproductive, you feel disconnected, and slowly you begin to search for reasons to act, not because the market has changed, but because you have. You want stimulation, you want engagement, you want to feel involved. And so you trade, Not out of clarity, but out of boredom. This is one of the most dangerous states a trader can be in, because the decisions made in boredom are rarely rational. They are impulsive, and impulsive decisions are costly. The solution is simple, but not easy. Step away. Do not sit and force yourself to watch. If there is nothing to do, then do nothing elsewhere. Return only when your conditions are met. There is another habit that separates professionals from amateurs: knowing when to stop, not when the market closes, but when your work is done. If you have taken your trade, if you have executed your plan, then your day is complete. There is no need to continue searching, no need to see what else happens, because that curiosity often leads to unnecessary risk. I have had days where I made my profit within an hour and I walked away, not because the market stopped moving, but because my edge had already been realized. This is difficult for many to accept. They believe leaving early means missing out. But what they do not understand is this: staying longer often means giving back what you have gained. Discipline is not only about entering trades correctly, it is also about knowing when not to take another. In the end, everything you are seeking in trading leads back to a single principle: less. Less noise, less activity, less emotional involvement, more clarity, more patience, more discipline. The best time of day to trade is not something you chase. It is something you recognize, and recognition comes from experience, from observation, from learning to separate what matters from what does not. You will not master this overnight. It takes time. It takes mistakes. It takes losses. But if you remain aware, if you begin to question your own behavior, if you learn to wait, then slowly things will change. The market will begin to feel different, cleaner, more understandable. Not because it has changed, but because you have. And that is the moment everything shifts. Not when you find a better strategy, not when you discover a new indicator, but when you learn to do less with more intention. That is the edge. That is the difference. And that is when you finally begin to trade like a professional.